BigBear.ai, which uses artificial intelligence to help improve decision-making, primarily for government institutions right now, reported quarterly financial results on November 5th, 2024. I'm going to review those financial figures, and I'm also going to update my buy recommendation for BigBear.ai stock, let you know if I think the stock is a buy, hold, or a sell after I evaluate the company's financial results from Q3 2024. So let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So one of the bigger highlights from the company's recently completed quarter was that they were awarded a 5-year production contract valued at $165 million, which will begin in the fourth quarter of 2024 to deliver the U.S. Army's Global Force Information Management. And so they've been successful securing contracts with U.S. government institutions. That's why I said they're primarily working with the government and the U.S. Department of Defense, the Army, etc., similar to how Palantir gained traction first with government institutions and now is expanding more so to enterprises. BigBear.ai is on a similar track, although having much smaller success compared to Palantir, which is absolutely thriving. BigBear.ai is still trying to find its footing. Revenue increased by 22% in its latest quarter to $41.5 million, but that included an acquisition, so it wasn't organic revenue growth. The company's still struggling generating organic revenue growth. Still, the acquisition did help. The acquisition of Pangiam did help the company's revenue overall increased, and incorporating talent from the acquisition will help facilitate improvement in the company's products and services. The company's balance sheet is not in an excellent position. The company has $65.6 million in cash as of September 30th, 2024. However, they have closer to $200 million in long-term debt. But the good news is that they only used up $1.9 million in operating activities in the third quarter. The better they get at operating the business without using cash flow and turning it into a positive number, the better investor enthusiasm will be for this stock. When they get on sustainable footing, every company, when they get to a position where they're consistently cash flow positive, that puts them on a sustainable footing because they no longer have to go to investors to ask for money. They just have to develop the business on their own pace and get themselves into a higher level of revenue, higher level of profit, higher level of cash flow. But when you're consistently negative and you keep having to go back to investors, you're a huge risk because there might be a point where investors say, you know what, enough is enough. We're not seeing enough progress. We're not liking the way you're utilizing the money we're giving you. And so we're not going to give you money anymore. Or if we are going to give you money, we're going to ask for a significantly higher rate of return on those investments. We're going to ask for more in return for our capital. So they reaffirmed their full year 2024 revenue guidance. They expect to deliver revenue between 165 and 180 million. Now, the company's CEO has been talking about headwinds for several quarters now. The headwinds we face as a business are unchanged. The cautious approach of governments and regulators towards artificial intelligence means our business will remain lumpy, and we understand these challenges are navigating them thoughtfully. And I thought this statement was very peculiar, and it contrasts what I've been hearing from nearly every other AI company out there, which is governments are actually very enthusiastic in embracing artificial intelligence, and they're investing and they don't want to get left behind. They understand it's strategically important. And if you look at the results of a company like Palantir, you'll see that governments are not cautious. At least U.S. government is not cautious and is enthusiastically investing in artificial intelligence capabilities. And so it's interesting to hear from BigBear.ai CEO saying the opposite. So it might be a company-specific issue here that BigBear.ai is trying to frame as an industry issue, which I don't see that in any of the companies I'm following. Anything related to artificial intelligence is absolutely thriving. And this is a first time I've heard these types of comments surrounding artificial intelligence from any of the companies I'm following. So I'm curious about this, and it's really different from what I'm hearing from all of the other companies I'm following in this industry. BigBear.ai reported a net loss of $12.2 million in the third quarter of 24 compared to a net income of $4 million in the third quarter of 23. However, that net income of $4 million in the third quarter of 23 was really a one-off event due to the change in valuation of some of their financial assets. It wasn't really net income as a result of a company that's delivering profits through operations. It was just profits through a revaluation of financial assets that temporarily boosted profitability. This company is not anywhere near generating profitability on the bottom line just yet. The good news is that they have a strong backlog, $437 million worth of backlog as of September 30th, 2024, and that this eventually turns into revenue. So it's a good indicator that the company's prospects in the future, it does have revenue coming in the future, and investors will hope that they continue increasing these backlogs. And the company highlighted that the results include the acquisition they made of Pangiam from the acquisition date of February 29th, 2024 to the end of September 2024. So as I highlighted, not profitable on the bottom line, this company operating losses of $10.5 million in the quarter that ended September 30th. That was worse than the losses of $8.2 million it generated in the same quarter last year. But remember, this includes the impacts of an acquisition, so their results will be a little bit disrupted over the next few quarters as we start to digest that acquisition and as they report it on a like-for-like basis year over year. But even before that, they were not profitable on the bottom line, and they're unlikely to be profitable on the bottom line anytime soon. And what I would like to see is improvement. I would like to see the company reducing these losses on the bottom line. I'll give them a pass this quarter because they're incorporating the acquisition. But after a couple of quarters, I want to see the company reduce these losses on the bottom line. And I highlighted that they keep having to get money from investors. And you can see that in the weighted average shares outstanding, they now have 250 million shares outstanding. That's almost double the 158 million shares outstanding they had in the same quarter last year. So they're selling more shares of stock to get more money so that they can fund these types of acquisitions and they can fund these losses on the bottom line. And the reason this is bad for investors is because if or when they do eventually reach profitability on the bottom line, those profits are going to have to be split with more shareholders and thereby reducing the earnings per share. So BigBear.ai did get caught up in the investing frenzy of artificial intelligence stocks earlier in the year, and the stock price popped up to close to $5 per share, up from around $1.50 a share. And I told investors to not get caught up in this hype, to not buy the stock at that point because the company's performance did not justify this price increase. This price increase was just on the back of AI enthusiasm, not on the back of improved operational performance. And if you follow that recommendation, you will have avoided that disaster. The stock price has fallen since then and is now trading at $1.80 per share. It's now trading at a forward price to earnings of 2.339, which is more expensive than where it started the year. But I haven't really seen a performance improvement to justify that. So to update my recommendation, I've had BigBear.ai stock. I haven't had it rated as a buy ever. I've had it rated as a hold all year long. And I updated that recommendation today, reiterating the fact that I think the stock is a hold. I don't think it's a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.